we are in a new investment cycle. I think a lot of people haven't quite internalized the fact, well, the recession is actually behind us. As we heard from the Fed and the comments just now, it's not going to be a fast recovery and it's going to take a long time. But we are in a recovery, and that really sort of drives our view of looking at the market, sort of following in an early cycle investment playbook. Every cycle is different, but there's certainly things that you can take away. So we think it is still a good time to be overweight risk in general. The risk assets such as equities, such as credit. Clearly, again, as we heard from Powell as well, the risks around this are very wide, so you don't want to go crazy. But we think a moderate overweight risk position here is the right place to be. Conversely, you probably want to be underweight duration. Again, at these yield levels, there isn't a huge amount that's attractive about being positioned there.
You know, Patrik, it's interesting because we had a guest on in the last hour who largely agreed with you in this whole idea of don't fight the Fed and go into risk. But his assumption was things could start to change next year. So at what point do you rotate and become perhaps a bit more defensive?
Actually, the rotation that we see is more the one that everyone has been waiting for a very long time, which is really a rotation more into cyclical trades, more into value trades, and perhaps, dare I say it, eventually out of US large cap equities, which sort of has not been a winning trade for a very, very long time. So, you know, for us, that's really the next rotation you're waiting for. It's extremely hard to time. So for the time being, we wouldn't want to take a massive skew in our positioning, massive sector or style tilt in either direction, preparing for that shift to happen. We do think that's going to happen, and to be honest, timing-wise, it's quite possible that it would happen before the end of this year. What would trigger it? Look, at the moment, the most likely thing would be really something from the real economy, maybe positive news on the virus, news on vaccine. That would be an obvious catalyst. We obviously don't know when we might get that, but we're sort of waiting for that to happen. It would be unusual cycle if it weren't to happen.